So here is everything that you need to know about tomorrow's inflation report before it gets released. But before we even get into that, let's give you a quick little update on the positive news, if you want to call it, that the market's been reacting to that ended up actually allowing the markets to not only recover, but actually close in the green 1%, right? We talked about this yesterday on Sunday during our Sunday stock talk. Hey, don't be surprised, although markets were down at one point during this, overnight trading session, as soon as overnight futures opened right around 5 p.m. Arizona time, we said this is a common trend. For the past 6 to 7 weeks, markets might open up on Sunday night in the red, but quickly tend to recover, especially if Trump sends out a tweet that signals a possible deal presenting itself. And that's exactly what happened. Right, it says Iranian president says that Iran is prepared to continue talks with the United States, and supposedly Iran has offered to pause nuclear activity for up to 5 years, but Trump wants 20. Market is expecting a U.S.-Iran deal soon, and a lot of other countries are pushing for this. So you could see that, again, the market is always going to be optimistic that they will close a deal until we get confirmation that it doesn't. The stock market is a leading indicator. It often gets ahead of itself. But then again, if we're wrong, if they begin to attack one another, then that is where markets will correct, right? That's it when it comes down to that. I just wanted to make sure that we were fully aware of what is currently going on and driving markets higher. What about for tomorrow? Tomorrow, like you guys are aware, is the PPI report. It's the producer price index report. It's the inflation report on the producing side of things, which is often viewed as a forecast for what gets passed down to the consumer. Tomorrow's overall PPI is expected to go from 3.4 to 4.6, and core PPI to go from 3.9 to 4.2. Again, feel free to look it up yourself. U.S. Producer Price Index report, and this is going to get released 1 hour before the markets open. As you can see here, this is where we are currently at 3.4, but tomorrow, like we just stated, from 3.4, we're expected to jump over a full percent. I think this is the part that people don't understand. Oh, Ricky, but it's factored in. Trust me, I get that the market's going to say that, and I get that people are going to think that. And that's fine for now because the market is irrationally bullish. We know that. It's eager to recover. A full 1.2% jump in our inflation rate just month over month is insane. That is what we began to see when inflation went to a 40-year high after the post-pandemic rally, right? That's when the Federal Reserve had to actually start raising interest rates to slow down the economy and to actually bring down inflation. And then we began to trade at the low twos. Now, again, we're at 3.4 and we're at one of the highest levels before we report tomorrow that will put us back on a continuous climb, heading back to the same highs that we were during the post-pandemic rally. We'll see how the markets react and if they care enough or will accept it enough, or will it be overlooked because of what's going on in the Middle East. Don't get me wrong. I can see it to be very likely that 1 hour before the markets open, this report comes out. And even if it comes out worse than what is expected, the markets will sell off a bit and then begin to recover. And if there's any news that is announced about the Iran deal possibly going through, it will throw this under the rug like nothing happened for now. But we will follow up with it in weeks once markets start feeling the pressure and the uncertainty. Very simple. Why does it matter about our PPI report or inflation report? Because again, no one really cares about producers. They often care about consumers. But if inflation is going up for producers are not going to just take on the higher prices. They need to make money. So they're going to pass those higher prices to consumers. And then again, a lagging indicator, but eventually it will hurt consumers. And that's where it really will matter, when Americans are paying more for the same goods that we were just a month ago. 1.2%, 2%. And we'll see how the Federal Reserve reacts, because that's really the most important factor out of all of this. The higher our inflation rate goes, the less likely the Federal Reserve is to cut interest rates. And that's what the market wants. That's what Trump wants. But it's not what he's going to get if the Federal Reserve continues to see inflation going up. Very simple. The reason why is when you cut rates, which is what the market wants, it's inflationary. But if inflation is already going up, they're never going to be able to justify that when inflation is already rising. You can't put out a fire by throwing gas on it. Make sense? You're just going to make it worse, exacerbate it. So very excited to follow up tomorrow. Again, very simple. If you're a beginner and you like the way that I break things down, I really do think that you'll like our live trading sessions. I try to break things down in kind of digestible snippets and concepts for beginners to understand. And on top of that, you also get access to our daily live trading session. So whenever you have a time, click that second link in the description down below. Learn more about our LPP team and see if it's a good fit for you. If you like it, then maybe tomorrow we'll see you at Market Open for our live session. I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take care, team.